U.S. stocks closed mostly lower on Wednesday, with the Dow ending little changed, the S&P 500 shedding about 0.25%, and the tech-heavy Nasdaq dropping roughly 0.2%. Tech stocks have been pulling back after driving much of the recovery from stocks' April sell-off, while sectors such as energy, healthcare, and consumer staples rose. The rotation from growth stocks to value stocks is linked to investors' expectations for lower borrowing costs, said Matt Stuckey, Chief Portfolio Manager for Equities at Northwestern Mutual Wealth Management Company.
Typically, what you tend to see is a broader market participation when monetary easing comes back into the picture. And we might start to see that in September. And so some of this outperformance of value in the last couple of weeks, I think, is somewhat reliant on that coming to fruition, which again is just the Federal Reserve starting to resume interest rate cuts.
Discussion of those rate cuts could come Friday when Fed Chair Jerome Powell speaks from the central bank's annual symposium in Jackson Hole, Wyoming. Meanwhile, the Magnificent Seven mega-cap tech stocks all fell on Wednesday, including AI darling NVIDIA, which reports quarterly results next week. And fellow chip makers Intel and Micron Technology dropped 7% and 4%, respectively. Among other movers, Target tumbled more than 6% after the company named a new CEO and retained its annual forecast that had been lowered in May.